Welcome back to my YouTube channel and thank you for subscribing. Thank you. Keep subscribing. Keep subscribing. Thank you. I'm Balafxofficial. Welcome to my channel. And in today's episode, I'm going to talk about three things. Least fun fact about foreign exchange. What is currency what is currency ETFs? What is retail forex trading look like in forex trading? We are on episode 6 and we have to deal on the theoretical part before we move into chart. In chart, there are many things and there are many information you need to know. Without this theoretical aspect, you are going to mess up on them. You will mess up in the charts aspect, in the practical aspect. So what we need to do, we need to take care of the theoretical aspect. So without wasting much time, let's get started. This is our episode 6 in our chat. So fun fact about currency exchange rate. Number one, exchange rate fluctuate. Yes, exchange rate fluctuate. Let me use layman language. It's not a fix. As you can see, for exchange rate fluctuate. Currency exchange rate are not fixed and can be changed consistently or constantly. They are influenced by various factors such as economic condition, interest rate, political event, and market sentiment. These fluctuations are created this inflation can create opportunities for traders and impact the affordability of goods and services when traveling abroad. What this means, exchange rate fluctuate is that it's not a fix. Like you can see naira to dollar. In the case of Nigerian currency, naira, as I said earlier, 2008 2010 dollar was 100 and something, and now it was 700 in 2023, going to 800 in some places. So it's not a fixed price, it constantly keep on changing. So that is how it is in forex also. And this fun fact, so if you buy and stake some certain things, there's are two probability: either it will go down or it will go up. These are probability will come in buy and sell, and in your buy and sell, either you make profit or you make loss. These are the two things in trading forex: either you make profit or you make loss. So number two, big impact on travel expenses. Sometimes if you were to exchange rate play a significant role in determining how much you will pay for goods and services when traveling international. A favorable exchange rate can make your currency go further, allowing you to get more value for your money. On the other hand, an unfavorable exchange rate may result in high costs. Yes, like these people that are traveling to outside internationally to do exchange goods and services, when their dollar is low, at least you will get profit. I think more high profit. But when the dollar is high, you will lose. You will get it at higher price. When the dollar is at higher price, when you want to make transaction, it will be so highly cost. Yeah, that's what it means. Number three, interconnected global banks. Currency exchange rates are interconnected in a global market. The value of one currency relative to another is influenced by the supply and demand dynamic between different country economics. Economics event in one part of the world can have ripple effect on exchange rate. Yes, this I agree with this interconnected global market. Like we already know in, let me say, 60, is it 60? I think it was 60 to 70% of the nation are using dollar. Are using dollar to reserve their money. Each country, you will see a specific, they mostly 70 to 60% they normally use dollar. That's why you can see dollar is at high rate in demand. That is why it is affected by supply and demand. It's affected by supply and demand. I think the higher the quality, the higher the quantity, the higher, that is supply and demand, the law of supply and demand. I think The higher the quantity, the higher the demand. The lower the quantity, the higher the price. No, the lower the quality. I don't know. I forget. Try to forget law of supply and demand. So supply and demand affects currency in forex trading. Number 4, currency speculation. Some traders engage in currency speculation and meaning to profit from changes in exchange rate. They analyze market trends, economics indicator, and other factor to anticipate currency movement. This speculation can contribute to short-term inflation in exchange. Yes, as a forex trader, you have the ability to mark your zones, make a trend analysis, economic research from previous data, and stick your trade. Then it will take you to some places by either profit or loss at the end, because this forex trading is all about profit and loss, and it's all about buy and sell, and so on. Number 5, currency pegging. Some countries choose to peg their currency to another currency, usually a major one like US dollar, yes, or euro. US dollar and euro and Great British pound are the most currency. This means the value of their currency is fixed or allowed to fluctuate within a specific range relative to choosing country. Pegging can provide stability but also expose the country economy to external factor. Yeah, you can understand this. Pegging, some countries do that, euro and US dollar do that, but it has impact, and it affects the economic sometimes when they do this, so it's not advisable. Many people don't do that. Exchange rate index. Number 6, exchange rate index are used to measure the value of a currency used to measure the currency relative to a basket of other currency. They provide a broader perspective of currency performance and are used to assess strength and monitor currency competitiveness. Yes, there's what you call, like if you go to bank, you will see something in blackboard they hang, something like, I think something like this. You will see sell, buy. Even in airport you will see something like this. USD, they buy it as this rate. Let me make it big, something. Let me make, you see something. Sorry to draw on the this thing. You see something big on board. In airports, in bank, these things normally appear. You will see sell and buy. You will see US dollar. You will see 500. Then they buy it. They buy at rate of 550. So did you see whereby this needs to come ask price and bid price, the amount that the bank is willing to sell for you and the amount you are willing to buy. Did you see each cost linked to each other? So this board, it has a huge impact. It has a huge impact. Let me screenshot this so that I will send it to group when explaining this site. Exchange rate index. That number 6 is called exchange rate index. You can see it in bank, in airport, and some other big firm, I think, organization. So number 7, impact on import and export exchange rate. Like this has to do with competitiveness in some country, international trade. An individual that do import and export, like within country to another country, it has impact on them. It can affect, like if China to Nigeria want to make transaction, they use dollar, and it has an impact movement in the market. So it affects, and that is at the fun fact. You can buy dollar today and tomorrow it will lose, you'll be on loss. And you can buy it today and you'll be on profit. That's what it means. But this is very important. Let me read the statement. Also, I'm going to send the PDF in the group. Try to check my Telegram group. It's there. All these PDF are all there, free of charge. Go through them. Go through again. Watch the video over and over and understand this before you embark into forex journey, because forex journey is a personal development. Nobody can train you. After you have been trained, it's left for you to decide whether to go to move further or not to move further. It's a personal journey because it's more of psychology. When we are getting to that, it's more of psychology. We are getting to that. Forex trading. All this is the theoretical part we need to know. These are what you call behind the scene, what you need to know and what you need to inspire, what you need to see. So, impact on import and export exchange rate in fluctuate currency competitiveness in international trade. A weaker currency can make export more affordable for foreign buyers, boosting the economy conservative. A strength currency can make import cheaper. Did you see? Weaker country make higher, while cheaper country make stronger currency make cheaper transaction to the other country, so that there is much of competitiveness. Remember, currency exchange rates are dynamic and can be fair reaching effects on global economic, travel expenses and international trade. Keep an eye on exchange rate, can be both informative and fascinating. As a forex trader, you have to deal with this. It's very important. So what is currency ETF? A currency ETF, short for currency exchange traded fund, is a type of investment fund tracks the performance of a specific currency or a basket of currency. Did you hear basket of currency? This is this measure some currency. They call them like stocks. They come together like 5 to 20 currency can come together and form as one basket. We call it currency ETFs. We call it currency ETFs. And this currency ETF are called indices. Like we can use example of Nasdaq. We are getting to that. NAS 100, US 30, German 30. This we can use this. So this, what it means in simple terms to explain it, a currency ETF, short for currency exchange traded firm, is a type of investment fund that tracks the performance of a specific currency or a basket of currency. ETFs are traded on a stock exchange market, making them easily accessible for investor or to investor. Currency ETFs aims to replicate the movement of a particular currency exchange rate against another currency or a currency index. Okay, they provide investor with exposure to currency market without directly trading currency investment. So this is what I mean. As I say in the next deck, we are going to do that practical on our next episode. So try to stick to the YouTube channel. Try to stick. This PDF will really help you when you read and go through them. So I'm just trying to summarize. I don't want this video to get long, please. It is important to know that the investment in EFT carries risks. Yeah, it is important to know because they have high volume and high impact more than the currency pair we trade. It have more impact. It has my high, like if you trade NAS 100 and GBP USD. This one is you can survive easily in this market, but this you cannot survive if you have $50. $50, it is hard for you to survive in this because 1 pip is very high. Why here you can, here 10 pip, is, I think with 0.01 lot size is $1. You will risk a little, but with this you are going to risk high. This $50 can sustain you very well, but it depends whether you can trade or you cannot trade very well. But it involves much risks. trading indices. Let's go to our next. What is retail forex trading in simple terms? So as we all know, retail forex trading in simple terms refers to the practice of individual traders participating in foreign exchange market. It involves individuals, often referred to as traders, or individual investor buying and selling currency with the intention of making profit from the fluctuation in exchange rate. Simple. Retail forex trader in simple terms refers to the practice of individual, that is me, you, that you want to embark on forex journey. Refers to individuals, often refers to as retail forex trader. Investor, but trying to buy and sell currency for another in order to make profit. That is simple term. Retail forex trading is typically done through a broker or an online trading platform. This platform provides traders with access to the forex market, allowing them to execute trade and speculate on the currency movement. Traders are various currency pairs such as USD, Euro, GBP, JPY, or USD card based on their analysis and market prediction. Yeah, there are almost over 180 currency, I think, in my previous video, as I stated earlier. So you can decide to choose anyone you want to trade upon and make profit. Retail forex traders are people like me and you. We trade day and day, and banks. So, however, it is important to note that retail forex trading carries risks. As I said, it is important to know retail forex trading involves or carries risks. The forex market is highly volatile and carries price can change rapidly. Traders can experience both profit and loss based on their trading decision. It requires knowledge, skills, and careful risk management to be successful in forex trading. So without risk management, you can't survive in this forex market. No matter how big you are, no matter how good you are, no matter how intelligent or brilliant you are, without risk management, because forex trading carry high risks of leverage or carry high risks. As you can see, let me highlight it. Many are trading forex and along the line, after they lose or they crash their money, $500, they will start crying. Forex is gambling. Forex is gambling. No, it's because you did not manage your risk management. You don't have risk management. You don't have a plan. That's why many people lose in this forex market and they fail. So let me add bonus to this class. That's what we call long. If somebody tell you I'm going long on GU, long on GU /USD, that is actually is buying that pair. And if the person says I'm going short SHORT, short, that means he's selling it. He's selling that pair. So that is what it means. We call this, anywhere you see short is sell, while long is buy. We call this in forex trading. Short is sell, long is buy in currency. When you see flat, when I say I'm flat on gold, I'm flat on GBP USD, that is I'm zero. FL80, that is zero. I've not executed any trade. Nothing. I'm free. So this is what it means. So thank you once again for coming to this end of this class, for staying tuned to watch this. Thank you. See you on my next episode. Try to subscribe, please, and turn on the notification bell, and share this video. I really love you. These are my handles. Try to subscribe, please. My YouTube channel, my Facebook, all is this. Please. Thank you. See you on my next episode. Peace.